Lido staked ETH is finally able to be withdrawn, and Coinbase has just heard back from the SEC. This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications to know when we drop the latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Did you know that our partners at Bybit are giving out up to $30,000 in bonuses? You also have a chance to win a new iPhone 14. Just check out the links in the description below. Bitcoin is still focusing on the $27,000 mark, having dipped to $26,870 after the daily close. Still lacking direction, traders had hoped that Bitcoin would either attempt to exit its narrow range or touch a more significant level up or down. For trader Crypto Ed, potential targets include the gap in CME futures created this weekend, saying it's really on the lower timeframes where the action is now. Higher timeframes are not really exciting. The CME gap to the downside lies between 26.5 and 26.8, just below the overnight lows. Crypto Ed continued by saying that a bounce after the gap could take Bitcoin back to its range highs at $28,800, but that a downside possibility left $24,000 in play. Trader Skew suggested that with the June 1st deadline for potential default rapidly approaching, markets were already feeling the pressure. Layer 1 blockchain Kava's native token has surged nearly 40% over the past week as its network prepares to undergo a major mainnet upgrade. The Kava 13 upgrade will speed up transactions on the network and offer greater security when it goes live on May 17th. The network will also launch a new bridge that facilitates the transfer of assets from Cosmos to protocols across Kava. Kava previously rallied roughly 10% last Wednesday after token holders suggested terminating the project's several grants and rewards programs by the year's end. The token's market cap is $513 million, and despite the gains Kava has noticed over the past week, the token's price has begun trading down as early buyers are taking profits. The Securities and Exchange Commission has issued a response to Coinbase's complaint requesting that the agency establish regulatory clarity for the industry. In an April petition, Coinbase demanded federal courts to instruct the SEC to act and issue clear guidelines for crypto exchanges and companies. In its response released Monday evening in New York, the SEC alleged Coinbase has no right to mandamus, which orders a government agency to fulfill certain duties. The SEC wrote in response, perhaps recognizing this, Coinbase instead asserts that its court should compel the commission to act on Coinbase's recently filed rulemaking petition, but no statute or regulation requires the commission to take such action on a specific timeline. The SEC in its response suggested that mere months have passed since Coinbase's petition was filed, and even less time has elapsed since Coinbase supplemented the record. The agency continued by saying that deliberating over the kind of significant changes sought by Coinbase, which could affect both crypto assets and security markets more generally, takes time. Some proponents of the crypto industry might argue that the SEC has been particularly active under Gary Gensler's leadership, bringing multiple actions against not only crypto projects, but also exchanges. Many have chosen not to fight the SEC's actions, such as Kraken, which settled over its staking service, but Coinbase has been clear that it has both the resources and the determination to press for regulatory clarity. Coinbase initially filed their suit in response to a Wells notice that the exchange received in March 2023. The notice, which precedes formal regulatory enforcement action from the SEC, pertained to issues the agency found with the exchange's wallet and Prime services. The SEC concludes that by saying that the fact that Coinbase would like its policy preferences addressed immediately does not entitle it the extraordinary relief ordering the commission to act on rulemaking petition that has been pending for well under a year. Gary Gensler claimed that the cryptocurrency field has been operating largely non-compliant, and the SEC chair was questioned about the dispute with Coinbase and the cryptocurrency regulations. Gensler said the rules have already been published. He further elaborated that the SEC has already set rules for asset custody, crypto exchanges, broker-dealers, advisors, and the registration of securities offerings. Gensler claims that except Bitcoin, most crypto assets are classified as securities under the definition of an investment contract.
False narrative to say that these things are that decentralized. They tend towards centralization. You can find a website for nearly, if there's 12,000 or 23,000 tokens, you can find some group of entrepreneurs in a website, and a Reddit channel, and a Twitter channel around most of these, again, without prejudging any one of them. You saw a series of actions that we've taken in that regard. But again, we stand ready to help those intermediaries come into compliance. I would say that their business models, though, tend to be built on non-compliance. Their business models tend to be built on taking customer funds, commingling it, and they're rife with conflicts. All we call upon our rules is about, for the tokens, register and have full, fair, and truthful disclosure, and the intermediaries to have register, of course, deal with the conflicts, and ensure that they have the time-tested rules against fraud, manipulation, and the like.
Lido upgraded to its second version on Ethereum on Monday, sending Lido, its native governance token, up 10% to $2.15 in the past 24 hours. Users can now unstake their ST-ETH and receive ETH at a 1-to-1 ratio, which takes about a day for most users if the exit queue on the Beacon chain is empty. The maximum time that it might take for a validator to exit and withdraw from the staking queue stands at about 5 days and 14 hours. Lido is a liquid staking derivatives protocol that allows ETH holders to stake their coins with participating validators and earn additional ETH as a reward. However, before the April 13th Shapella upgrade, Ethereum did not allow validators to withdraw their Ether held in the staking contract. Even after Shapella, Lido users couldn't withdraw their ETH because Lido software did not have the withdrawal function. But yesterday on May 15th, the Lido DAO voted to upgrade Lido to version 2, allowing withdrawals for the first time. Liquid staking solutions have gained in popularity since the Shapella upgrade, and on May 1st, liquid staking became the top decentralized finance category in terms of total value locked, surpassing even decentralized exchanges. However, there are still some legal questions around liquid staking in the United States, as the Securities and Exchange Commission has recently stated that it may see staking providers as securities issuers. Lido users will also receive an NFT as an immediate step between requesting to unstake and claiming one's ETH. When a user requests to unstake, they'll receive a Lido-issued NFT representing their withdrawal request. Lido has already withdrawn more than 278,000 ETH, making the staking giant the fourth largest entity by ETH withdrawals, trailing crypto exchanges Kraken, Coinbase, and Binance. Lido said the new V2 received 9 total audits from several firms. All have been completed except for one, which is expected to finish by the end of May. It appears the embattled crypto lender Celsius is wasting no time in shifting its Ethereum staking tokens from liquid staking platform Lido, which has just enabled withdrawals. On May 15th, a transaction was identified on Celsius wallets for 428,000 staked ETH to the Lido staked Ethereum wallet. The whopping stash was worth $781 million at the time of transfer. On-chain data points to Celsius performing a test withdrawal of 0.1 ST-ETH a few hours later. According to Bitcoin pioneer and Celsius creditor Simon Dixon, Celsius could be lining up for staking directly without Lido in the middle. He added it could also be a loan collateral for Celsius's restructuring plans. And today, Looks On Chain identified 3 whale accounts that have been accumulating Lido, saying, due to the launch of Lido V2, we noticed 3 whales accumulating Lido in the past week. One address withdrew over 724,000 Lido, worth around $1.52 million from Binance at the price of $2.01. Another whale withdrew 655 Lido, worth $1.38 million from Binance at $1.83. The third whale bought 570,000 Lido with $974,000 at $1.71 on May 12th. Nansen's Shapella dashboard is still reporting that there is more ETH depositors than withdrawals, and because of this, we may not see a major dump just because of these withdrawals. As I shared at the beginning of the video, you can earn up to $30,000 and a chance to win a new iPhone 14 with Bybit. For more details, check out this in-depth video we made on how to enter, all linked down below. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.